Hello, my dear students. We will be studying stock exchange today. We will be beginning with altogether a new chapter, which is stock exchange today. Now, under topic number 14.1, you will find the meaning of stock exchange given, and I would like to notify that there you've got the meaning given under the Securities Contract Regulation Act 1956. Though they have put it down in a much more formal language, but before we can discuss that in the class, what here I would like you to concentrate is that it is a highly organized financial market where shares, debentures, bonds, and other capital natured items, those are transacted in between buyers and sellers, and they are invested in the quickest, cheapest, and fairest manner. Now every country has got a stock exchange, and apart from the apex stock exchange, a country operates also via through various small stock exchanges located in various regions, places, or like in India, it is situated in different states. So, in one sentence, if you need to wrap up the meaning of stock exchange, it is basically a market where investments, bonds, securities are traded in between buyers and sellers. Now, what are the features? Of course, it is an organized market, which is already said in the definition. It deals with securities, bonds, investment papers. Only authorized agents can operate in a stock exchange. It is definitely a form of association or a company where people come together to carry forward capital nature transactions. It has a governing board, to supervise its various functions and transactions, so that there is no manipulation, no corruption, no misdeed carried in these stock exchanges. Transactions can be made in accordance to prescribed rules and regulations. Definitely we'll know in the class in detail that what are those rules and regulations and which is the parenting body having a vigilance on it. Now, the next topic is about functions of stock exchange. Of course, it's a ready market for your securities and investments and bonds. It determines the prices of various shares of the companies. You must have noticed in television also there are so many channels that cover up, that give you the live update of all the changes that are happening in that value of the shares of the stock exchange. So basically it is price determining body, protection of the investor. So once as an investor you invest money there, you know that your money is protected because it is under direct vigilance. Capital formation in stock exchanges, money is created out of money, right? So you invest, you buy in shares, bonds, securities, and over the time, if the company is having good fortunes, then the prices will rise, and of course your money will get multiplied. That results into capital formation because you've invested your savings, you've invested your money. Channel of investment, of course, if you have to find out a proper channel of investment where you will want to have the security of the government and proper vigilance so that there's no corruption, no cheating, then of course stock exchange is a very, very safe place of your investment to be channelized. Economic barometer, now of course it tells you about the true economic situation of the country. Wider ownership of securities lead to the fact that you can actually be owner to so many number of shares in various companies. There's no restriction. It facilitates also distribution of new shares. Once you get listed in the stock exchange, automatically your company becomes popular. And regulation of the company management, we all know that they will be following the guidelines as provided by company secretaries and chartered accountants under the various features of the Companies Act. And it finally acts as a clearinghouse of information, that wherever different bodies are there, it acts as a merger, it acts as an arbitrator, in between carrying forward and discussing various issues and decisions. Services of stock exchange. Now, they render services in three different dimensions: to the investors, to the community, and to the corporate sector. Now, to the corporate sector, of course, it offers a very wide market for selling shares. It is a matter of prestige for any company to be listed in stock exchange. When the stock exchange, the overall Sensex rises, of course the prices of the shares for all the listed companies in the stock exchange, that will also rise. That will maintain prices of various shares. And to the investors, like, it is very ready mode of converting your investment into cash. It is safe, you can get loan facility also, and you can have enough amount of publicity and advertisement for the shares and the securities that are being traded there. Investment, it acts as an investment guide. You can can take help from the brokers and the agents, better bargains. It offers good deals to investors, it offers good deals to companies also, and of course definitely because it is secured, so it has less risk. Now overall community financing option of capital formation that is being exercised, so the entire community is benefited. It is a channel of profitable investment. That means it is a good lucrative region where you can put in your money. Public finance means that it yields money for the entire country, and of course it shows the economic picture. Now we will be discussing about in the class about various major stock exchanges in India, and after that, you've got types of operators of stock exchanges: brokers, people who act as middlemen who sell shares; jobber, who buys the securities on his own behalf and then sells them out for profit. You've got the differences also, brokers and jobbers, which we'll be discussing in the class in detail, point wise. Then you've got two interesting terms: bulls and bears. Now, a bull is a speculator who expects a rise in the prices. If you've noticed the nature of the animal, I mean the bull as an animal, you will find its health is always held high. So that leads to the notion that all the investors who speculate that there will be a price rise of the shares in the future, they are referred to as bulls of stock exchanges. And bear, just the opposite, they expect a fall in prices. If you've seen a bear walking, it puts his head down, bows down to the ground, goes a sniffing, and goes on walking on the ground. So with that nature, that resemblance in the nature, those investors, those who speculate that the prices of the shares will fall in the future, they are called as bears. There are a list of differences between bulls and bears of a stock exchange, like jobber and broker. We'll be discussing that in the class too. Terms used in stock exchange, popular terms like ex-dividend, that is the shares are sold ex-dividend, means that the right to receive the dividend shall remain with the seller. Whereas cum dividend, just the opposite, when the shares are sold cum dividend, then the rights to receive the dividend passes on to buyer instantly. Spot delivery, as the name itself suggests, means the security sold by a member on the stock exchange will be delivered instantly, immediately as the transaction is met. Whereas for forward delivery, you will find as soon as the transaction is happening, the delivery of the shares doesn't take place then and there. It happens on a later day. That's the reason why it is called as forward delivery. Then you've got Sensex. Of course, it's a market capitalization weighted index. Bombay Stock Exchange Sensitive Index, that's the full form, BSC Sensex. Basically, it's a benchmark index of the Indian capital market, according to which you will precisely decide upon the shares of the company. So it serves various objectives, like it controls the market movement as far as money is concerned. It sets up a standard. Then capitalization of money takes place. Industry representation, it represents an entire economy. It regulates the trade. Number of trades and the volume of trade is also being regulated by it. Nifty, the other parallel concept that runs, you must have often heard that term popularly being used in so many share market channels that you have on television running 24/7. A weighted average of 50 constituent scripts is used to calculate the Nifty. Nifty, if you see, it says 50 diverse scripts which represent over 20 sectors of Indian economy. So like BSE Sensex or like the Sensex, it also helps the investors to channelize their fund. They can track market movements. They can evaluate how good their management has been in deciding the investment. Traders and intermediaries in stock exchange can judge sentiments of the market. That is, what is the flow of the capital in the market. It can be replicated by the index funds. That is, whatever money you've put in, you can actually calculate your total Nifty. Then it is definitely like Sensex, it is also used as a benchmark. It is helpful in deriving various trading practices. And the last topic under this chapter is SEBI. SEBI is Securities Exchange Board of India. SEBI, will be learning about its objectives and functions. Of course, as the name suggests, Securities Exchange Board of India means that it is basically that body that governs the capital formation or the investment. So, of course, it looks forward to promote fair dealings amongst traders or investors. It provides high degree of vigilance and protection, regulates and develops a code of conduct, that is a set of rules, and based on these objectives only, it fulfills provides the following functions like regulating the business, registering the work of the stockbrokers, the authorized agents. Then they will be promoting self-regulatory organizations, promoting investors education and training. They will stop fraudulent practices, unfair practices. They will give insights to the traders. They will be helping people, investors, to acquire required number of shares at required number of prices. They can channelize the price. They will also decide that what amount of the fees should be charged for as brokerage charges or as agent charges. Then it will be performing functions that will ensure that SEBI has total power over the channelization of capital formation. And last, it also performs or any other function that is being prescribed by the government, keeping in mind the loop of capital formation, right? So we're through with the chapter, and there are yet many other details that need to be discussed that we will be discussing while we proceed with the chapter in the class. So thank you everyone.